Welcome to the program. Today we'll talk about what's happening on the markets and the global economy. We'll get an update on any the important company news going around at the moment, and we'll talk about, and I'll ask the expert panel if they know what a transition to retirement pension is. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.
We've only got a few minutes on each topic, so we're going to go through this very quickly. First question to you, Pete. Markets have had a good run. We're sort of heading towards our 8th up week in a row. Your thoughts on what's happening at the moment?
Well, we often have said, sell in May and go away. May's over. So I'm running with maybe sell in June, go into a cocoon, and come back for the springtime swoon. That's my new one.
I wonder how long that took you to think up, Peter.
10 seconds last night before
You've got a lot of time on your hands.
That's right, that's right. Look, I suspect there's going to be a testing of this market's rise. I don't think we're going to drop back like we did in January, February, but I'll be really surprised if between now and, say, October, we don't have a bit of a sell-off.
Paul, there's a huge amount of economic data coming out this week. How important is that data with the overall movement of the market?
It's probably more important politically. I mean, I don't think you can... I have to say this, I hope I'm not going to really embarrass someone from the ABS, but I don't believe any of their data, right? So they're going to come out with...
I like the good stuff, the right...
They're going to come out with a growth...
GDP's out today.
That's out today. Market's looking 0.6, 0.7. That'll probably get bigger news politically, but it could be just as easily as 0.2 as it could be 1%, right? So who knows? I don't think you can trust it.
are forecasting 1.1, which is a little
if you
aggressive.
look at some of the if you look at some of the net export data, you could go on the higher side. So who knows? As I said, I don't think you'd read anything into these figures, but the politicians will.
Yeah, we have grown 99 quarters in a row, and the world record is the Netherlands, 103 quarters. So
you've come up with some really good information this morning, Peter.
We will be the greatest economy of all time.
Anyhow, coming back to the market, Marty, I think, look, at 5,400, still doing a lot of work. We're up 3.1% in May to be up 3.6% year to date. I think people forget that. 3 up months in a row, and again, that hasn't happened for a little while. Yeah. So the market's done a while here, but it is...
We're talking financial year to date there?
We're talking about financial year to date. Calendar year to date, since the start of January.
And we're up about 12-13% from the bottom of the start of the year.
Probably a little bit more than that. From the lows and about the 10th or the 11th of February.
14.8 on Saturday. I said.
So 5,400. You've got to expect a lot of work here. I think the market's just lacking energy, and
this is a strong resistance level traditionally.
Yeah,
too, isn't it?
I think we're due for a bit of a pullback, but at the moment I don't think there's any sort of influence, and so if we get no news, we'll probably just meander back a bit.
Pete, non-farm payrolls on Friday. Quick answer. What are you expecting there?
Well, probably another pretty fair number. But what I worry about is Brexit, and I worry about Trump, and I worry about the Fed rate hike, and I think they'll do it in July.
When are you expecting a Fed rate hike?
July.
Moving on, Paul, company news at the moment. Any companies investors should be looking at right now?
Look, again, I think this is time to readjust portfolios. We have talked about CYB, which is the old Clydesdale Bank. That's had a huge run. I thought it was super value when you got the shares. Getting up towards $6, I'm probably almost ready to sort of dump them a little bit. Not because they're not, they weren't super cheap, but they haven't done much, right? All they were was just a spin-off, a little bit of freedom, a new management team. It's probably too early for the market to get excited, but it has got excited. Momentum buying. And we see that with a lot of stocks at the moment. When the market starts to buy something, it just pushes it, and you've seen that. So, look, if you got a little parcel in the float, and a lot better. They came on at about $4. They're now about $5.60, $5.70. So I think they're our best performing bank stock this financial year.
It is hard for investors to know what to buy at the moment. Do you guys feel that?
Yeah, I can't get excited. I'm really struggling. I mean, I think there's a lot of the small stocks have been bought up. A lot of the so-called stocks like Transurban, people have paid top dollar for that. I think property trusts look pretty expensive. But, I'd really like to say buy the banks, but I'm troubled buying the banks is they still, whenever, there's a lot of resistance there again. People have sort of got in their mindset that everyone's too long or offshore's going to sell it, and
you buy them for the yield, that's all you buy it for.
So I still think that's probably the better value, but it takes a little bit of courage at these levels.
Moving on next topic, Pete, can you explain to us what a transition to retirement pension is?
Yes, I can. You can too, can't
I can too.
Excellent. Okay, so obviously there's been a fair bit of talk about this recently. Melbourne broadcaster Neil Mitchell took the foreign minister and to Julie Bishop, I should say, to task about not knowing what a transition to retirement pension is. Pete, can you explain what it is?
I'll do it in simple terms, and Paul can correct me anytime he likes. Basically, if you're 56 or over, you're still working, you can take this up to age 65, you can keep doing this. What happens is you can draw down on your pension anywhere between super. take it as a pension, between 4 and 10% you can take out each year. And so the end result means that you can put a lot more money of your income from your work into super via salary sacrifice. Now that money could be taxed at 45% plus all the other charges. If I'm putting in the super, you only get taxed 15%. But the beauty about this, and Paul, what's the best thing about transition?
Well, I mean, the reason everyone does it, of course, is that the investment earnings on that part of the super become 0% tax rate.
Zero.
And that's what the government's talking about, changing from the 1st of July and making it back to the 1st of July.
It's only started to get some traction because there's been so many other things we've been worried about.
This was announced on the 3rd of May. This is one of the biggest changes. And of course,
this is on the well telegraphed too.
Yeah, basically sort of going to kill transitional retirement strategies because they were, by and large, a bit of a tax of, I'd say tax avoidance, but they were tax efficient.
It was the greatest tax gift of all to retirees.
So if you're over 56, you probably wouldn't bother to do one now, unless you want to access super early. So
and the people who were paying 0 and they're going to pay 15, they would be pretty cheesed off.
I think the message there is that that Neil Mitchell was making was that there are a lot more than 4% of the population who have exposure to the transition to retirement pension, and they're going to be impacted.
But he actually has rattled the can on the number of people who are affected, namely the concessional caps. Tell that story quickly.
Yeah, I mean, the biggest change, which is still not getting the publicity, is the change in the concessional cap down to $25,000. That's going to have a huge impact on people long term. The other people it's going to impact most directly are politicians, because if in the new politicians get super, they get paid 15.4%. Right, base salary for a Canberra politician is $200,000. That's over $30,000.
You're over the cap.
So all the politicians in Canberra are going to be over the concessional cap come the 1st of July 2017.
And they'll be punished by the tax office.
And they're going to be punished. So, they haven't realised that themselves. So that shows you, I think the Julie Bishop thing shows you just what a cocoon Canberra lives in about superannuation. They just had it too good for too long.
We've used the word cocoon twice and it's mad about money.
In case you guys didn't know, the bell did ring. You heard it right here. That's all we've got time for. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.